is coming in on the economic front, aside from Super Tuesday news. Within the past couple of minutes, the Fed has cut interest rates now, announcing a 0.5 percentage cut. Why? Because of the coronavirus and the economic slowdown that we've seen on Wall Street over the last week because of that. I want to go to NBC's Hans Nichols at the White House. MSNBC's Stephanie Ruhle is in New York. This is the first emergency cut since 2008. And Hans, this is exactly what President Trump wanted to see and, in fact, called for yesterday.
The president has been jawboning the Fed all along. He's been doing this before coronavirus, after coronavirus. He's always wanted to have lower interest rates because inside the White House, and the president especially, understands the direct correlation between economic growth and loose monetary policy. So throughout the presidency, he's been doing it. It's been more acute here recently. At almost every moment, and Hallie, you've been to these press conferences as well, the president has called for the Fed to take action, to do something on the monetary side. He got his wish. I think we also need to twin this with the statement we had coming out of the G7 this morning that countries across the G7 are going to be coordinating their response, doing things what they think is appropriate on the monetary side, but also the fiscal side. So I would look not just to see what happens in the U.S., but what's happening internationally in terms of tax cuts and other central banks moving. But clearly the president getting his wish and getting a big boost for his reelection. Hallie?
Let me look at the big board here because the Dow is ticking up a little bit, I think up to about 80 points higher than it was before news of this announcement. Steph, what does this mean for the markets, Wall Street, and importantly, for consumers, too, now that the Fed has cut this rate? How does that help boost the economy?
Okay, I would say a few things. First, the president hasn't always wanted rate cuts. When he wasn't in office, when Obama was, the president railed against it, saying how much it hurts savers. But absolutely, without a doubt, the president wants rate cuts because it boosts the markets. It doesn't necessarily boost the economy. And when you actually saw the market rally yesterday, that was on the assumption, the prediction that we would see a rate cut here and across the world. So while the president has been pressuring the Fed, you cannot say that Jay Powell is doing what the president told him to do. That's why he did it. Now, here's what many people think doesn't make any sense. When you cut rates, the entire idea is with low interest rates, people, businesses will go out and spend, borrow, create, boost the economy. That flies in the face of what we're doing, the precautionary measures people are taking around the coronavirus. Look what corporate America is doing, sending people home to work, canceling business travel. The whole idea is the place where you're seeing it contained the most is where you're having quarantined. So yes, this is going to be a short-term positive for the markets, and we know that's what the president wants. But as far as the economy goes, growth forecasts are being cut across the board. People aren't spending, and a rate cut might not solve for that.
Thank you for checking out our YouTube channel. Why don't you subscribe? It's really easy. Just click on that button down there. And for more news from MSNBC, click on any of these videos here for the latest interviews and highlights. You can get more videos from MSNBC with our newsletters. Head over to msnbc.com/newsletters to sign up.